थोड़ा ऊपर जाओ। Very good afternoon, all the viewers. Hope you all are doing good. May blessings be upon you all. Welcome to Commerce second year class. In yesterday's class, we had started doing problems on admission of a partner. Okay, so we did two problems also. Now let us move forward and take third question, right? So page number 240, question number 3. Page number 240, question number 3. Okay, so let us go through the question first. Naresh and Ramesh are partners in a firm sharing ratio 2:1. Their balance sheet is given. Creditors, bills payable, general reserve, capitals. On the asset side, we have cash at bank. We have bills receivable, data, stock, investment, machinery. On 1st April 2019, Suresh was admitted into the partnership for 1/6 share in the profits of the business, and the terms of condition were Suresh should bring 30,000 as capital. Remember, guys, whenever a new partner is admitted, he will introduce his capital, and as well as sometimes he'll also introduce goodwill in cash, right? Then, so Suresh should bring 30,000 as his capital. Stock be depreciated by 5%. Machinery was valued at 50. Provide for bad debts at 8%. Bills payable need not be paid. Suresh should pay 15,000 to Naresh and Ramesh as goodwill privately. Now, unlike the last two problems where goodwill was brought in by the new partner in cash, here it is said that goodwill is paid privately. It would be very simple if such a case is given. When goodwill is paid privately, when goodwill is paid privately, then no accounting treatment is required. No accounting treatment is required. This will be very simple. Sir, we used to prepare goodwill account. In the last two problems, we prepared goodwill account. Yes. But now you don't have to prepare. No need of preparing goodwill account. Okay. So let us move further. How do we start? Admission of a partner, how do we start? We'll first prepare revaluation account, and in revaluation account we'll show all the net changes in the value of assets and liabilities, right? So I'm starting with that. As I said, question number 3, page number 240. Page number 240, question number 3. I'm beginning with preparing a revaluation account. Revaluation account. Revaluation account is a nominal account. All the expenses and losses are debited. All the incomes and gains are credited. On revaluation of assets and liabilities, whatever losses we incur, we show it on the debit side. Whatever gains we incur, we show on the credit side. So, as per the problem, stock is to be depreciated. Depreciation is a loss, let us say. So I'll take it on the debit side to stock. What is the book value given? Book value of stock is given as 30,000. 30,000, 5% would be 1,500. 30,500 would be 1,500. Then machinery is valued at 50. You look in the balance sheet, machinery is given as 45,000. The book value of machinery was 45. Now it is revalued at 50. There is an increase. There is an increase in the value of machinery. That will take on the credit side. 5,000 machinery. Then provide for bad debts at 8%. Here, I would like to seek your attention. Provision for bad debt is already given in the balance sheet, you see. Provision for bad debt is already appearing in the balance sheet. How much it is? Look at the balance sheet. Debtors are 21 and provision given is 1000. But as per the latest information, provision for bad debt is required at 8% on debtors. And the debtor value is how much? The debtors value is 21,000. So we have to calculate on 21,000. 21,000 into 8 by 100. How much? 1680 rupees provision is required as per the latest information. But we already have 1000 rupees, isn't it? We require 1680 as per the latest requirements, but we already have a provision of 1000. So how much provision we have to create? We have to create 1680 minus 1000, that is 680 provision. This is the new provision. This is the old provision. New minus old. So we'll create provision of 680 only. Hope this is understood. We'll create a provision of only 680 rupees. Okay, done. Moving forward. Bills payable need not be paid. Bills payable is a liability and we don't have to pay bill payable. So there is a decrease in the liability. We don't have to pay bill payable worth rupees 2000. Total bills payable given in the balance sheet are 20,000 and it is said that we don't have to pay bills payable worth rupees 2000. So our liability is decreasing. Decrease in the value of liability is a gain. So we should take it on the credit side by bills payable 2000. Then, okay, all the adjustments done regarding assets and liabilities 1, 2, 3, 4. Now let us close this. Let us close the revaluation account. See what is the total? Debit credit side it is 7,000. 7,000. 7,000 minus 2180. 7,000 minus 2,180 on the debit side. We are getting 820. 4,820. Okay, 4,820. This is the revaluation profit. This is the revaluation profit. And this revaluation profit is to be distributed among all partners. Who are the partners? 4,820. This profit is distributed between Naresh and Ramesh. In what ratio? In their profit sharing ratio. What is the profit sharing ratio given? 2:1. So this revaluation profit is distributed between Naresh and Ramesh in the ratio 2:1. Okay. So how much will Naresh get? Naresh will get 4,820 into 2 by 3. Similarly, Ramesh will get 4,820 into 1 by 3. 1s, 6s, 33. And here again, 1s, 3 1s, 3, 3 6s, 18, 0, 3 6s, 18, 0.666 will get. So if you distribute, you'll get, let us take the round figure. I'll take this as 7. Okay. Three ones are 3, 3 6 are 18, 0, 6. So 1606 is the share of Ramesh and 1606 into 3 if I do 2, suppose, sorry. Sixteen naught 6 into 2. 3212 and 1612. Okay, 3212 and 1606. So Naresh will get 3212 and Ramesh will get 1606, or we can take this round figure as 8. or you can take this 3 or 7. We are rounding it off to the nearest rupee. Okay. So this is how the revaluation account is done. Go through once. What was new here? It was about the provision creation, isn't it? And one very important new adjustment what we learned here is regarding goodwill. So when goodwill is paid privately, we don't have to prepare goodwill account. There is no effect given in the books of account for goodwill. Now let us prepare the second account. What we prepare is cash account. Okay, cash account, or we can take it as bank account. Cash or bank account, let us say. Actually, practically speaking, it's not cash account and bank account. We have a 3-column cash book where we show both this inflow and outflow of cash and bank balances. So what is the opening balance given? The opening bank balance is given as 6,000. So I'll take it on the debit side. To balance brought down 6,000. Then the new partner, who is the new partner? Suresh. Suresh has introduced 30,000 as capital. So I'll take that. Suresh capital is 30,000. Right? Then shall I take goodwill? Then answer is no. We will not take goodwill here. Sir, why are we not taking goodwill? Because goodwill is paid privately. When goodwill is paid privately, we don't have to show any effect regarding goodwill in the books of account. So what is our cash or bank balance now? It is 36,000. By balance carried down 36,000. Tell me, now when we are preparing balance sheet, how much cash balance will I show or bank balance? It would be 36,000. In the new balance sheet, my bank balance would be shown as 36,000. Okay, then, so we don't prepare goodwill account as I said because goodwill is paid privately. Now let us go to the next step, that is our partners capital account. Okay, what is the next step? It is partners capital account. How many partners? 3 partners. Okay. This is a combined capital account. Partners capital account of, what are the names? We have Naresh, Ramesh and Suresh. Naresh, Ramesh, Suresh. N for Naresh, R for Ramesh, S for Suresh. Suresh is the new partner. If you remember, in my yesterday's class, I told you, normally or generally, we get 4 items on the credit side. What are those? What is this column? This is particulars column. This is particulars column. This is debit side. This is credit side. We begin with opening balance of their capital. Naresh capital is 60,000. Naresh capital is 60,000 and Ramesh capital is 30,000 and Suresh has just now introduced capital of how much? He brought 30,000, right? Suresh introduced 30,000 towards his capital. What was the second adjustment he used to take? We used to take goodwill, but here no goodwill, right? Because goodwill is paid privately. After that, we go for accumulated profits and losses. I said 4 things. 1 is the capital, 2, goodwill, 3, accumulated profits and losses, which include general reserve, reserve fund, or P&L credit balance. And 4, revaluation profit. Revaluation profit. We have prepared revaluation account. We got a profit which is distributed 31211602. So he'll get 3212, I think, and 1608. Right? Anything else? General reserve. Now, what is general reserve? General reserve is given as 21,000. What is the general reserve amount given? General reserve is given as 21,000. So this 21,000 has to be distributed in the ratio 2:1. So how much will Naresh get? 21,000 into 2/3. 21,000 into 2 by 3. 3 sevens are, so he'll get 14,000. And Ramesh will get 21,000 into 1 by 3, that is 7,000. So goodwill, general reserve is distributed as 14,000 and 7,000. Okay. Anything else you see? Goodwill is not there. 77,212. Okay. So what is their capital? 77,212. And this is 38,608. And this is 30,000. So now, what are the closing balances we have? To balance carried down. Naresh capital is 77,212. Ramesh capital is 38,608. And Suresh capital is 30,000. 77,212, 38,608, 30,000. Okay. Then the same balance by balance brought down 77,212, 38,608, and 30. Is it clear? What is the last step left? It is, of course, the balance sheet. Balance sheet I'll take on the next page. Balance sheet, I told you, whenever we are preparing the balance sheet of the new firm, you always prepare it in the same sequence as given in the question. So what am I preparing? I am preparing balance sheet of the new firm as on 1st April, 2019. Okay. So these are our liabilities. These are the amounts. This column is assets, and this is again amount. Okay. So remember, I told you, whenever we are preparing balance sheet, it has to be prepared in the same sequence as given in the question. So there will not be any chance that you miss any of the items if you go with the sequence. What is the first one given? Cash at bank. The first item given in the balance sheet is cash at bank. Cash at bank is given as 6,000. In the balance sheet, cash at bank is given as 6,000. But will I take 6,000? No, I will not take 6,000. Instead, I will take this 36,000. Right? That is the current bank balance we have after the capital introduced. So I'll take 36,000. Then what is the second item given? Second item given is bills receivable. There is no change in bills receivable. So I will take as it is bills receivable as 10,000. Then we have debtors. Debtors are given as 21,000. And old provision is there. Old provision is there, 1,000 rupees. But we have, as per the requirement, we have to have provision of 1,680. Already we had 1,000, but we have increased it by another 680 rupees. So total provision now required is 1,620. So if you deduct 21 minus 6, this thing it would be 19,320. Hope this is understood. Next, stock. Stock is given as 30,000. Stock is given as 30,000. But again, I will not take 30,000 because there is an adjustment on that. It is revalued. It is revalued at 5%. So we have decreased 1,500 from this. So deduct that and write 28,500. Yeah, very good. Next, machinery. Machinery is given as 35,000. Machinery is given as 35,000. Is there any adjustment on machinery? Yes. Machinery is given as 45,000. Yeah, before that, we have investment. Sorry, we'll go in the same sequence I said, no? Before that, we have investments. There is no change in investment. So investments will write as it is. Investments are given as 35,000. Investments are given as 35,000. Now coming to machinery. Machinery is given as 45,000. But we have appreciated, no? Machinery is increased by 5,000. So here also we have to add it. Here we have to add the value of machinery by 5,000. It is appreciation or purchase, whatever it is, but it is increased by 5,000. Now our machinery is 50,000. Right? So asset side is done. Now let us take the liability side. What is the first item given in the liability side? The first item given is creditors. Okay. What is it? Creditors. What is the value given? The value of creditors is given as 15,000. 15,000. Then we have bills payable. Bills payable is given as 20,000. Shall I take 20,000? No, because there is an adjustment on that. Rupees 2,000 worth of bills we don't have to honor. We don't have to make the payment. So that amount is waived off. We don't have to pay 2,000. So we'll be paying only what? 18,000. Okay. Then we have general reserve. But as you have seen, we have distributed general reserve. So there is no balance left in general reserve account. So no general reserve. Directly go to capital. Any accumulated profit or loss distributed will again not appear in the balance sheet. So we have Naresh, we have Ramesh, we have Suresh. What are their capitals? We have prepared their capital accounts, no? 77,212. Naresh capital is 77,212. Ramesh capital is 38,608. And Suresh capital is 30,000. Sum up, please. See the total. The total is 46, 56, 65, 85, 93, 98, 98, 128, 1,78,820. Here also 820, 68, 150, 138, 145, 155, 170, 178. Yeah. So the total is 1,78,820 on both the sides. Is it clear? Is it understood? Okay, we'll take one more question. We'll take question number 4. Page number same 240, question number 4. I'll go through the question, you see, please. Raju and Rao are partners sharing profit and losses in the ratio 3:2. The balance sheets as on 31st March 2020 is as under: creditors, bills payable, general reserve, cash at bank, data, stock, furniture. Ready is to bring 2,50,000 as capital, 1 lakh as goodwill, stock and furniture be depreciated, make a provision. Very simple question. Very simple question. But still we'll do it for practice sake. How do we start? We always start admission of a partner solution. We always start with preparing a revaluation account. Revaluation account. Revaluation of what? Assets and liabilities. As on the date of admission, all the assets and liabilities of the firm are to be revalued. Any profit or loss occurring should be debited or credited to the old partners in old profit sharing ratio. So what is the first adjustment regarding assets and liabilities? Stock and furniture be depreciated. Stock and furniture be depreciated. So to stock, to furniture. How much? Stock is depreciated by 10%. The book value of stock is 3 lakhs. So 10% would be 30,000. And the book value of furniture is 1 lakh. 10% would be 10,000. Isn't it? 3 lakhs into 10 by 100, 30,000. 1 lakh into 10 by 100, 10,000. Then make a provision of 5% on debtors. That is, debtors, there is a there is a anticipation, or as per the conservatism concept, we are providing out of our past experience that there may be a loss of 5% as because of irrecoverable debts. How much it is? 5%. And debtors are given as 2 lakhs. So to provision for bad debts at the rate of 5% on 2 lakh would be 10,000. Then land and building is appreciated. Appreciation is a gain, no? So we'll take it on the credit side. Buy land and building. At what rate? 20%. What is the book value given? 2 lakh 50. 2 lakh 50 ka 20% is 50,000. Any other adjustment? No. Let us close it. Let us close it. Which side is heavy? Surprisingly, on both the sides, we have 50,000, 50,000. So, revaluation profit or revaluation loss is nil. There is no change in the, in spite of changes in the value of assets and liabilities, overall effect is nil. Okay, chalo, good then. It becomes very simple for us when we come across such questions, isn't it? So let us go to the next step. What is the next step? The next step is we prepare a cash. We prepare a cash account, or as I told you, write cash oblique bank. Cash oblique bank. What is the opening cash balance given? Cash at bank is given as 2 lakhs. Cash at bank is given as 2 lakhs. So 2 balance brought down. How much it is? 2 lakhs. Now, after the admission of partner, the new partner, who is the new partner? Reddy is the new partner. Reddy has introduced 2,50,000 as capital and 1 lakh as his goodwill. So there is an inflow of cash in the business, one pertaining to his capital, which amounts to 2,50,000, and the second one, goodwill introduced by him, is 1 lakh. Hope this is understood. Sir, in the last problem, when you were preparing cash account, you have not taken goodwill. Yes, I did not take, because in that case, goodwill was paid privately. Remember, when goodwill is paid privately, no accounting treatment will not record it in the books of account. As such, I did not take it. But here it is not said like that, no. It is very clearly stated that goodwill is introduced in cash. So I have taken it. So what is the total now? Now the total balance is 5,50,000. So by balance carried down, 5 lakhs 50,000. So what will be the balance we have to carry forward to balance sheet? It is 5,50,000. Sure, good. Then what do we prepare? Then we prepare goodwill account. We prepare goodwill account. See, there are different treatments for goodwill, I told you in yesterday's class. But always do remember, when we are preparing goodwill account, always do remember, goodwill will always be debited with old partners account. When we are preparing goodwill account, except when goodwill is paid privately, when we are preparing goodwill account, on the debit side, you should always write to A, to B, or to Raju, to Rao, whatever the old partners' names are, in the ratio, we should always debit goodwill account. Okay, so what is the amount of goodwill? The amount of goodwill is 1 lakh. So this 1 lakh is to be distributed to whom? To the old partners. How much? Who are the old partners? Raju and Rao. And what is the ratio? 3:2. Are we distributing goodwill in old ratio? Answer is no. We are not distributing goodwill in old ratio. We are distributing goodwill in sacrificing ratio. Sir, 3:2 is the old ratio. Yes, 3:2 is the old ratio. And if you calculate sacrificing ratio, in this case, it also will be 3:2 only. So when I am distributing revaluation profit, when I am distributing general reserve, I'll be distributing them in all profit sharing ratio. But when I am distributing goodwill, I am distributing goodwill in sacrificing ratio, which happens to be 3:2 only. To Raju, to Rao. What am I doing? I am distributing goodwill. What is the goodwill amount we have? What is the goodwill amount? Goodwill amount is 1 lakh. Goodwill amount is 1 lakh. What ratio? 3:2. What is this ratio? This is the sacrificing ratio. This is the sacrificing ratio. So how much will Raju get? Raju will get 1 lakh into 3 by 5. That would be 60,000. And Rao, the second partner, will get 1 lakh into 2 by 5. 5 twos are so 40,000. Is it clear? Raju and Rao are the old partners. Ratio is 3:2. 1 lakh is distributed in that ratio. So Raju will get 60,000. Rao would get 40,000. And goodwill was introduced in cash. See this here? Cash account debited to goodwill account. Now when I am preparing goodwill account, it will have the corresponding effect. I'll write it on the credit side as by cash 1 lakh, and the goodwill account will be closed. Right? See this? Then what is the next step? The next step is preparation of partners' capital. Hope you all are following. Yeah. So let us go to partners' capital account. We prepare combined capital account of partners. We prepare combined capital account of partners. Anyhow, we are using the whole screen. Let us do it. This is partners capital account. Who are the partners? Raju, Rao, and the new partner is Reddy. Raju, Rao, and Reddy. Ready? Yeah. Remember, I told you on the credit side, we generally get 4 items when we are preparing partners capital account. Normally, we get 4 items on the credit side. First one is capital. Second one is goodwill. Third one is accumulated profits. Fourth one is revaluation profit. So let us see what are the capitals given. What are the capitals given? See, the capitals are Raju's capital is 4 lakh. Rao's capital is 3 lakh. Raju's capital is 4 lakh. So by balance brought down, Raju's capital is 4 lakh. Rao's capital is 3 lakhs. And Reddy has introduced capital. Cash account debit to Reddy's account. How much capital did he introduce? He introduced 2,50,000. Hope this is clear. So this is one item. I said 4 items. 1, goodwill. Sorry, 1, capital. 2, goodwill. 3, accumulated profits or losses. 4, revaluation profit. And if it is a revaluation loss, it will appear on the debit side. Very good. Chalo, next. Buy goodwill. We have just now prepared goodwill account. We distributed, no? 60 and 40. So Raju will get 60 and Rao will get 40. Then see if there is any general reserve on the liability side. Yeah, general reserve is given as 1 lakh. So that general reserve also has to be distributed in all profit sharing ratio. That is 3:2. So again, it will be 60,000 and 40,000. 1 lakh into 3 by 5. 1 lakh into 2 by 5. Then revaluation profit. Revaluation profit. Check our revaluation account. There was no profit. There was no profit, no loss. So let us close it. We don't have any revaluation profit or loss. Close it. 4 lakh 60 plus 60. How much it is? It is 5 lakh 20,000. Right? So what is the capital of Raju? 5 lakh 20,000. Raju's capital now is 5 lakhs 20,000. Rao's capital is 3 lakhs 80,000. And Reddy's capital is 3 lakh 50,000. So let us close it to balance carried down. Raju's capital is 520. Rao's capital is 3 lakhs 80,000. And this is 3 lakh 50. 5 lakh 20. 3 lakh 80. 3 lakh 50. Right? Then these are the opening balances. Now buy balance brought down. Raju's capital is 520. This is 380. This is 350. So simple. Right? Chalo. Now what next? Next we have to prepare balance sheet. Okay. We have to prepare what? We have to prepare balance sheet. So let us get ready for preparing balance sheet. So simple. Right? How do we write the heading? Balance sheet of the new firm. Balance sheet of the new firm as on the date of admission of the partner. When was the partner admitted? The partner was admitted on, date is not mentioned. So let us take 31 March 2020 only. So we'll write like this. Balance sheet of the new firm as on 31st March 2020. And remember always whenever you are preparing balance sheet, go in the same sequence as given in the question. Liabilities, assets. Okay, so what is the first item? Go in the same sequence. Cash at bank. How much is given? 2 lakhs is given. But will we take 2 lakhs? Answer is no. Will not take 2 lakhs. We will take 5 lakh 50,000. We have prepared cash account. As per that, balance will take cash at bank as 5 lakhs 50,000. What is the second item given? The second item given is sundry debtors. Second item is sundry debtors. Sundry debtors are given as 2 lakhs. Will I take 2 lakhs directly? No, I think there is a provision on that. There is a provision on that. Provision on debtors is 10,000. So we have to deduct that. Okay. Then, sir, what is this sundry? What does this sundry mean? Sundry is total of all the debtors. Okay. There will be a numerous customers. There will be a numerous parties purchasing on credit from us. Sum up of all those we call it as sundry debtors. So provision for bad debts we have created for 10,000. Deduct it and write 1,90,000 in the outer column. Okay, very good. Next, the next thing is stock. So again, will I take the value given as 3 lakhs in the outer column? Answer is no. What we did, we had revalued the asset and there is a decrease in the value of asset by 30,000. So that I will deduct and write. Okay, that I will deduct and write minus revalued, and there is a decrease of 30,000. So I'll write 2,70,000. Next is what? Next is furniture. Furniture 1 lakh. Furniture is 1 lakh. Again on furniture we have depreciation. So what I'll do is I'll deduct depreciation and I'll take the net figure in the outer column, that is 90. The next one is machinery. Okay, the next one is machinery. There is no change in machinery. There is no adjustment on machinery. So let us write machinery value 1 lakh rupees as it is. Then we have land and building. Land and building was appreciated. Land and building is given as 2,50,000, but it was appreciated by 20%, which amounts to 50,000. Now, the land and building value would be, how much? It would be appreciated by 20%. So it would come down to 3 lakh. See the total. Before that, let us do the liability side. What do we have on the liability side? We have sundry creditors, bills payable, and general reserve and the capital. So let us start again. Sundry creditors. Sundry creditors. Sir, what is sundry again? Sundry is sum of all the creditors. We might have purchased goods from different parties, and those are our suppliers. All those are our creditors. Sum up of all this is called as sundry creditors. It is 1,50,000. Next one is bills payable. There is no change in bills payable. So as such, right as it is, bills payable 2 lakhs. General reserve, as you all know by this time, that general reserve or any accumulated profit which is distributed will again not appear in the balance sheet. So let us take the capitals. Raju, Rao, and Reddy. What are their capitals? We have prepared capital accounts now. 5,20,000, 3,80,000, 3,50,000. 5,20,000, 3,80,000, and 3,50,000. With this, we are done. Just see the total. 150 to 350, 350, 850, 850, 9, 12, 15 lakhs 50,000 is the total I'm getting. 350, 7, 8, 15. Yeah, 15 lakh 50,000 is the total I'm getting on the liability side. See, we have the same balance on asset side. 550, 550, Reddy's capital is, 1 second, 250. Okay, Reddy's capital is not 350, it is 250. Reddy's capital is 250. So here, Reddy's capital we have to take as 250. This is 380. This is 250. So what will be the total now? See the total on the asset side, 550, 190. This is 6, 740, 940, 1,10,000, 1,10,000, 11, 12, 13, 14, 15 lakhs. 15 lakhs on the asset side. Here you see creditors 150, bills payable 2 lakhs. Okay, then the capitals 520, 380, 250. So 350, 58, 870, 870, 950, 1250, 15 lakh. Yeah, here also we have 15 lakhs. See the total? Okay, so we are done with question number 4. Okay, so we'll take one more question. That is question number 5. Mr. X and Y are partners sharing profit and loss in the ratio 4:1. Their balance sheet is given. capitals, general reserve, P&L balance, creditors, furniture and all that. Then page number 241 and 242. They agreed to take Mr. Z into the partnership with effect from 1st April. Mr. Z brings 40,000 towards goodwill and 60,000 as capital. The assets are revalued as furniture, stock, data. The goodwill will be retained in the business. Yeah, there is something new given about goodwill, that goodwill is retained in the business. In all these problems also, we were doing the same thing. He don't have to mention. Okay, he don't have to mention that the goodwill is retained in the business unless said otherwise. Unless he says that goodwill is withdrawn by the old partners, we assume that it is retained in the business. So let us start with revaluation. As we always do, we first prepare revaluation account. Revaluation account. So see the revaluation, the changes in the value of assets and liabilities. Furniture now is to be taken at 50. In the balance sheet, it is 40. So there is an increase. So I'll take it on the credit side. I'll take it on the credit side. By furniture, 10,000 increase. Right? Then stock is given as 78. In the balance sheet, stock is given as 80. So there is a decrease of 2,000 in stock. So I'll take it on the debit side. To stock, 2,000. Then debtors are given as 58. In the balance sheet, debtors are given as 60. So again, there is a decrease. Obviously, on debtors, if there is a decrease, it is assumed that we have created a provision. So provision is for 2,000. So what is the net balance? 10,000, 10,000. So 6,000 difference we are getting, which we call it as revaluation profit. This revaluation profit will be distributed among all partners in all profit sharing ratio. What is their old ratio? 4:1. And who are the old partners? X and Y. X and Y. So X will get 6,000 into 4 by 5 and Y will get 6,000 into 1 by 5. 5 ones are 2s are. So he'll get 4,800. He'll get 1,200. X will get 4,800. Y will get 1,200. Okay. What is the next account we prepare? We prepare cash account. We prepare cash account or bank account. Cash oblique bank account. What is the opening balance given? The opening cash or bank balance is given as 50,000. Cash balance is given as 50,000. So that I'll take on the debit side. To balance brought down 50,000. Then the new partner, who is the new partner? Z. He has introduced capital of 40,000 and goodwill of 60,000. Sorry, goodwill 40,000 and 60,000 capital. So to Z capital, it is 60. To goodwill, it is 40. See, he has given in a reverse order. He first gave goodwill. Z brings 40,000 towards goodwill and 60,000 as capital. And the goodwill is retained in the business. So there is no outflow. Now the cash or bank balance is 150. So by balance carried on 1,50,000. 1,50,000. Okay. So to balance brought down. Now when we are preparing balance sheet, I'll take bank balance as 150. What is the next account we prepare? It is goodwill account. The next account what we prepare is goodwill account. Remember, I told you whatever treatment of goodwill case is, whatever the case is, we always debit goodwill account with all partners. To X, to Y. What is the goodwill amount? We have 40,000. 40,000 again is to be distributed in the ratio 4:1. Okay, 4:1. So 40,000 into 4 by 5. 5 8s are, 8 4s are. So 32,000 and he'll get 8,000. Okay, X will get 32,000 and Y will get 8,000. And as the goodwill is introduced in cash, it is closed by transferring to cash account like this. 40,000, 40,000. Right? Next. What is the next step? We prepare partners capital account. So I'm preparing partners capital account. We prepare a combined capital account of all the partners. Who are the partners we have? We have partners like X, Y, and Z. X, Y, and Z. Z, Y, and X. Usually we get 4 items on the credit side. I told you what is the first one? It is their capitals. What is the capital of X? The capital of X is 50,000 and Y is 1,30,000. X capital is 50. Y's capital is 130. Z. Z has just now introduced a capital of 60,000. This is item one. What is the second item we take? We take goodwill. Goodwill distributed to X is 32. Y is 8,000. See if there is any accumulated profits. We have two. One is general reserve. So general reserve of 30,000. 30,000 will be distributed again in the ratio 4:1. That is 4 by 5. 5 6 are 6. 24,000 and 6,000. Okay. 30,000 into 4 by 5 and 30,000 into 1 by 5. Again, P&L credit balance is also given. P&L credit balance is given as 10,000. 10,000 into 4 by 5. 10,000 into 4 by 5, 8,000. 10,000 into 1 by 5, 2,000. Lastly, we'll take revaluation profit. How much profit did we get? We prepared revaluation account, no? How much profit we got? 6,000 distributed as 4,800 and 1,200. So X will get 4,800, Y will get 1,200. See the total? 50 plus 2, 32, 82, 102, 106, 114, 1,18,800. X capital is 1,18,800. Okay, Y's total 130, 130, 144, 145, 140, 138, 144, 46, 1,47,200. And Z, of course, it is 60 only. So 2 balance carried down. X capital is 1,18,800. Y 1,47,200. Z 60,000. 1,18,800. 1,47,200. 60,000. Right? Now let us do the last step, that is the balance sheet. That is the balance sheet. Okay. So how do we write the heading? Balance sheet of the new firm as on. What is the date of admission given? The date of admission is 1st April 2020. So balance sheet as on 1st April 2020. This is our asset side. This is our liability side. Prepare in the same sequence. What is the first thing given? What is the first item given? First item given is furniture. Furniture. It is given as 40,000. But will I take it? No, because there was an adjustment done, no? Furniture was appreciated or depreciated? It was appreciated. Furniture was appreciated by 10,000. So now it is 50,000. What is the second one? The second item is stock. Stock was 80, depreciated by 2. Stock was 80,000 and it was depreciated or revalued by 2,000. Now its value is 78,000. Then bills receivable, there is no change. Bills receivable, there is no change. Right as it is 20,000. Right as it is 20,000. Then we have debtors. Debtors are given as 60,000. But then we have created a provision of 2,000. As such, the value of debtors we have is 58. And lastly, it is bank balance. What is the bank balance we had? We prepared bank account, no? We had 1,50,000. So bank, I'll take 1,50,000. Done. On the liability side, we have capitals. We have capitals X, Y, Z. Capital of X was 1,18,800. Capital of Y was 1,47,200. Capital of Z was, how much capital did he introduce? He introduced a capital of 60,000. Then what is the next item? General reserve distributed. P&L balance distributed. Creditors 25,000. Creditors 25,000. And lastly, we have bills payable, I think 5,000. Sum up. Sum up. Selected 128, 148, 128, 148, 156, 306, 3,56,000. 861, 613. Again, 3,56,000. Okay, so this is how we have done and concluded the problem. Okay, check the total on both the sides. Okay, with this, I'll conclude today's class. We'll take few more problems in tomorrow's class, but please do prepare seriously all these questions, what we have done. Please go through and practice once. Okay, God bless you all. Take care. Good day.